Hi, I'm Lisa from GTA Accounting Professional Corporation. Today we'll discuss tax implications for Canadians working temporarily in the U.S. Are you a Canadian resident working in the U.S.? There's a Canadian-U.S. tax treaty that was signed to help cater to situations where Canadians move to the U.S. temporarily to work. It is very important to take the time and understand how you are supposed to be taxed. Generally, you will not pay taxes on employment income if you are not a U.S. citizen, so as long as you meet the requirements below. You do not have employment income of more than US $10,000. You will only be in the U.S. for not more than 184 days in a 12-year period that starts and ends in the respective fiscal year. Your remuneration is not paid by or on behalf of someone who is a resident of the U.S. If you fail to meet the above minimum requirements, then you will be required to pay U.S. federal and state income taxes where applicable on your wages. The income that you acquire from the U.S. will also need to be reported on your Canadian tax return. Avoiding double taxation. Since you will be paying income taxes if you don't meet certain requirements and reporting this on your personal income tax return, there's a risk of double taxation. However, you need to avoid this by making sure you claim a foreign tax credit when filing your Canadian returns. Even for those who meet the requirements mentioned above, it's important to note that the individual U.S. states are not all bound by the treaty, so it's still not a guarantee that wherever you go to work in the U.S., you will not be subject to the state's income tax. The best approach is to speak to your tax accountant as soon as possible, even before you travel to the U.S. for work. Understand your U.S. and Canadian filing requirements before moving forward. Are you self-employed? The taxation rules for self-employed individuals going to work in the U.S. are different. Self-employment income earned in the U.S. by a Canadian will not be subject to tax if you lack a fixed base or permanent establishment in the States. You need to file a treaty-based tax return, which will exempt you from paying taxes in the U.S. on your self-employment income. Again, the rules vary from state to state, so even though you may be exempt from federal tax, you may still have to pay the state's income tax. One thing that could lead to paying taxes in the U.S. if you are self-employed is if you stay there a very long time in any 12-month period. You are deemed to have a permanent establishment. It's important to understand the tax rules before traveling and get your documentation prepared if you will be required to file income tax or federal taxes in the U.S. Consult your tax accountant for advice on how to avoid paying double taxes and take advantage of available credits for your specific situation. Thank you for watching, and if you would like to learn more, our CPA accountants would be happy to help you.